Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday or Synthetic Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Oil is again going to be the driver of sentiment here, folks. We're getting a lot of numbers out from a lot of different sources about who was agreed to what. And when. We'll find out for sure when OPEC Plus meets at 10 a.m. Eastern time. But until then, we're getting a lot of different readings as far as what the Saudis could do, what the Russians could do, what the U.S. could do. So that'll be our leader of sentiment here this morning. We also have a number of individual headlines on our radar. Disney Plus came out with some good numbers. Costco had some sales yesterday. And we'll talk about those, take some questions from our chat. Our guest today at 8:35, we'll be joined by Craig Johnston. He is the managing director and a technical market strategist at Piper Sandler. He'll join us in about 32 minutes from now. We also have jobless claims. Don't forget at 8:15, that'll be a big number as it's been the past couple of weeks. I'll throw it to Joel now. Joel, tell us what happened here overnight.
Well, we're trading just in the red by 22 handles at 27.13. We were able to take out the pair of highs from Wednesday and Thursday at the 27.50 area, getting to 69.75. So that's your first target on the upside. Also, we've been talking about mid-range up for this entire break at 27.86. So additional level as well. Your pre-market low down at 27.08 and a quarter. Really not much down there. Maybe some support a little bit at that. Psychological support at 2,700. Crude continuing on its rally from yesterday. We got up to 27.46. Trading back under $27 at 25.90. Once again, the price of crude will be dictated by the news coming out at 10 a.m. Gold back up again, up nice 7-year high a few days ago, gave a little bit back, but now back in the 1,700 handle, perhaps closing over 1,700 for the first time in 7 years. Silver in the green as well. That's by 20 and a half cents at 15.41. And Bitcoin is trailing down $1.90 at 7,145. Triple D was watching that close yesterday and with the imbalances and kind of didn't go as expected from what I could observe. What was your take on it?
I think it went exactly as expected. I mean, the market was strong into it, and then they were all buy imbalances. So obviously the market had a feel for where they were. And then we did rip higher in the initial numbers, but then we came in a little bit. So towards the end, we came in the last couple of minutes as they did pair off a little bit better than they have been doing. We've been seeing these violent 350 moves where it just goes in one direction and continues for the entire 10 minutes. We did that in the first couple minutes. Again, as high frequency traders see those initial numbers, they will immediately buy the stock. So in the initial split seconds after 350, you're always going to get a drastic move in one direction or another as that gets priced in, at least until we have floor traders on the floor. But then, obviously we didn't get the follow through this time. So we actually leaked the gains back to a certain extent, the 350 gains, but we still closed very, very strong. Overnight, we've had ridiculous action. We sold off a bit, then we rallied the hell out of them. Then we sold it off again. Now we're still trading down here. But the story probably today is going to be about oil.
Right, so we're going to get that OPEC Plus meeting here in a couple hours. A few numbers being floated around here this morning. Different sources saying different things. One source told Reuters that Russia would be willing to cut up to 2 million barrels per day. Another source telling Renaissance Capital that the total production cut for all of OPEC Plus will be about 10 million barrels per day. Another source I'm seeing on Twitter saying there's going to be 15 to 17% cuts between all across all of OPEC plus. So a lot of different numbers being floated around. We don't know exactly what the cuts will be, but it seems like there's some semblance of an agreement that there's going to be a cut. But so I saw that Putin has no intention of talking directly to the Saudis. So no one's agreed to jack yet, and we'll wait and see what comes of the 10 a.m. meeting.
So you're seeing this dash for trash here. You saw it big time last night. You're seeing it to a certain extent still this morning, although the sell-off in the markets is not helping the dash for trash. But a lot of little oil stocks trading higher, not so much the big ones. You look at the Exxon Chevron there, Chevron's trading flat now. But if you look at the little ones like the Halliburtons, if you look at, all those companies that have basically, been teetering, those are the ones that are ripping. Apache APA is trading up 12% here this morning. You're just seeing, a lot of oil companies, smaller ones really trading strong even ahead of this. They were stronger even last night. Like I said, the overall market weakness is starting to hit some of those individual stocks. But for the most part, you're seeing a lot of strength in little oil names. You were also seeing strength last night in the casinos. You were seeing significant strength in the airlines, which you're still seeing there today. LUV trading up 2.5%. These are big moves considering that the market is down almost 1% delta. So the trash, basically the story of the day is a lot of the trash. And what I mean by trash is the companies that have really been hit hard in this, the ones that are down 70 or 80%, those are still up here this morning. And then you're seeing a lot of, the other names trading weaker. A lot of tech stocks that have held up well are actually some of the more weaker stocks here this morning. So definitely some rotation, serious rotation from the leaders into the laggards. And that's been the rotation for the last couple of days, and we're continuing to see that.
I want to talk about, I guess, a stock that was a leader at the start of this whole crisis. That was Costco.
Yeah.
Because they came out with their March sale, with the month-over-month sales yesterday after the close, and the numbers were objectively very good. Right, sales for the month of March, just under $15.5 billion, up 11% year over year. I think it was up, 9% month over month I saw. So that's a great result, but the expectations were just sky high for this one.
Yeah. It didn't matter what they reported, they were going to hit it on it. And obviously these sales came out, and so as much as most of the stocks out there have very low expectations, the expectations for stocks like Walmart and Costco are sky high. So they couldn't meet those expectations. They hit this right off the initial number and kept hitting it. So I'm actually not surprised it's down 10 points because look, the stock has been holding up. You're talking about a stock that's literally 2 or 3% from its all-time high. Everybody banking that, Costco, that's where I want to hide out. Well, the market likes to punish the maximum amount of participants. If you're hiding out in a stock like Costco, you're getting hit here overnight. I mean, still, Costco is going to hold up better. If we roll over and die, a stock like Costco is going to hold up better because people are still going and buying food. They're still lining up to go into these stores. So they're still busy. The company itself is firing on all cylinders. No fault of the company. Just the fact that the expectations for this stock at this point in time were just too high.
Joel, thoughts on how shares reacted?
I think Joel's on mute.
Is Joel?
Yeah, the old mute trick. I tell you, this is, if you have the daily up, I don't know if you're looking at the daily or the 15-minute, really hard technical pattern to discern. Some very wide ranges at the beginning of March for quite some time, and then you settled into like the 285, 295 area, and then you got away from it. You had a big day. I believe that would have been Monday. You had the big up day, kind of a continuation on Tuesday and Wednesday. I'm just looking back, that area where you had all those other highs, 294, 295, 293. I think that old resistance there could act as new support. Your pre-market low comes in right at 293.56. So, and you're trading just above that. So it's very important for it to hold that area instead of falling back to the 285 area, which defined kind of the lower edge of that jagged range. I don't even know what you could call this formation, but with the space in between. But That's good support 294, 295.
There's a lot of underneath demand always for a stock like Costco. I do think it could trade eventually down to the 280 level again. I mean, it's traded down there a lot of times. Why not
Yep.
again? That's where your major, as Joel always says, super duper support comes in at 280. I mean, there you can just see that's the line in the sand. Remember Harlan Pine? We always had him on the show, and he'd say, "Bring up a chart." And your first instinct after you look at the chart for 2 seconds, what numbers jump out at you? On this case, you bring up the daily. I see 320 and I see 280. And obviously it's been between those ranges here for the better part of the last month. Gets up in the upper, 310 to 320 area, finds resistance. 280 is huge support. So you buy at 295. You could be early. I mean, it's hard to time these things perfectly. I love the 280 level on Costco though.
I think there's, if you want to get like a order delivered, I think there's like a 8 or 10 day waiting
Costco?
period. Yeah. Yep. So
I mean, that's everywhere on some of these stores. I mean, some of the independents are delivering now. Like I heard Staples is delivering even. I didn't realize that. Companies that and stores that don't have typical delivery services. I don't know if Staples does, if it's a good example or not. But I didn't know you could get computer paper. Like I had a friend, they're like, out of computer paper. It's like, oh yeah, I just ordered 2 bundles from Staples. It was $10 worth of computer paper, and they brought it over to me for free. I'm like, I don't know how they like the gas money, well, I guess with gas prices cheaper, maybe they can do it. But, a lot of little independents are delivering here now too. So you just don't have to go to the majors on some of the retailers to get your stuff. Just a point.
I know this is purely anecdotal, but I haven't been to Costco in about a month. Right. Like I was afraid.
I'm scared of Costco.
Yeah. I'm a little afraid of going to Costco. It's just like too many people.
Yeah.
Like for me right now.
The time to go to Costco was 2 months ago.
So I did a big shop like March 1st, March 2nd, March, somewhere in that first week of March range, and haven't been back since. So
I mean, I don't want to go even into, so I'm doing the click and collect where at the grocery stores, I'm actually doing that today. I'm going every 2 weeks to the grocery store. I got my mask, I got my gloves, I got my hand sanitizer, and I bring my pickup, and I literally just pop the back open. I don't even interact with the person. I let them just put the groceries in the back of the truck, and then I bring the groceries home. And everything that doesn't have to get refrigerated goes in the corner of the garage for 3-4 days. Stuff that has to get refrigerated, I wipe down Lysol wipes. That's about all you can do.
Yep.
So and obviously you can wash the fruit in warm water. Some people are saying put soapy water, but I don't like eating soap, so I'm just using warm water. You're trying to do your best. But to go into the grocery store at this point in time, I don't want to go in there because it's just too many people. Like especially at Costco. There's so many people going through, there's no doubt there's been some people who have went through your Costco that have had COVID. There's absolutely no doubt. And they're saying when they cough in the air, that the cough can stay in the air for up to 3 hours. So, I mean, all it takes is, a couple of people with COVID going and coughing around and you could get sick. So I'm very hesitant to go into a store like that. I feel like the time to go to Costco was a month and a half ago, a month ago before this thing started. Now it's like, why do I want to go there now? So if you think Costco is going to keep blowing away with the numbers here through this whole thing, I don't think so. So, that's one thing to consider. That the trade and the big money, was made there in late February, early March when their lineups outside the door and that Costco went up like 20
Hey,
bucks.
Dennis, get ready here.
I was about to say
815 is a number.
815 is a number. Go wide. 5.2.
Thank you.
5.2 million jobless claims is the estimate for this week's number. We know 10 million have filed in the last 2 weeks alone. So we're about a few seconds away from this number coming out right now. What do I see?
Market's a little bit nervous hanging out in the lower quadrant.
Are you sure it wasn't 8:30?
Oh, you know what? It might be 8:30. I'm sorry.
I thought it was 8:30.
I'm sorry. I
just canceled my orders.
I'm sorry.
I have 15 minutes. I could have still been trading.
I'm sorry. 8:30 number. I'm sorry.
I thought it was 8:30. I was like, 8:15 is ADP.
I'm sorry. Yeah, it is.
ADP.
ADP is out.
Yeah.
All right.
So jobs claims coming out at 8:30. I was like, this is not.
Sorry, folks.
You scared me. I was like, I didn't know it was an 8:15. I thought it was 8:30. So I'm like, okay, I cancel.
Sorry, folks.
I'm not sitting over there getting picked off. It's a good point to make. Like people say, oh, I cancel my orders. Why do you cancel your orders at 8:30? Because, or before these numbers, because if you're sitting out there and the market rips, 2% in a hurry one direction, well, you're going to get picked off. If you have orders sitting out there before the numbers come off, it's a lose-lose because if the market, let's just say, for instance, you have Bank America and you want to sell in the pre-market, it closed at 23.45. And, you'd say, okay, well, I'll sell at 23.35. And you have your order sitting out there. If the market rips, it's going to rip really fast and you risk getting picked off. If the market tanks, you don't get executed. So by sitting your orders out there, just sitting them there, you're a lose-lose. You won't get filled if your direction is in your favor, and you will get filled immediately if it's not in your favor. So that's why you don't sit orders out there before big numbers, at least on market makers.
Are those
unless
all
you're going really wide and you think it's going to whipsaw, that's the only reason. But if you're sitting out there at just above fair value at like 0.5%, it rips 2% on you, you're going to get picked off. High frequency traders are
these
fast,
for all?
man.
Are these for all for exits or potential entries as well?
Both.
Okay.
I mean, on an exit, like you're saying, Joel, if you really think, you really want to throw it high and you think it's going to whipsaw and call it. But I'll tell you that the only way you get executed by a high frequency trader is if your order is mispriced for the most part. They're not picking off orders that are correctly priced, or they're picking them off. It's on the ETF arbitrage and the index arb. And if you're sitting out there on a stock like Apple, I'll sit scratch or I'll sit down 1%. The market tanks 2%. You're going to get hit on your bid, and you're going to get hit very, very, very quickly. So that's why it's a lose-lose for liquidity providers around these numbers. And that's why you see liquidity. If you were to chart it, you have liquidity, here right before these numbers, liquidity drops substantially. Eric Hunsater at Nanix used to do a great job with it and would show how it, how the liquidity falls so dramatically before those 8:30 numbers. It has to. The market maker can't sit out there, make a 5-cent market, and then get picked off and lose a buck. So on the 8:30 numbers, everybody goes wide. That's what I mean by go wide. You get wider with your bid, wider with your ask. In some cases, if you really want out of a stock, maybe you've got a level, maybe you leave the order out there for that reason. But for the most part, if you're getting executed at 8:30 on those numbers, it's because your order is likely mispriced.
I can show you the matrix for TradeStation right now, and I can't look at it because it moves so fast. But you see anywhere from 8 to 10 contracts at each level. I mean, and it doesn't stay anywhere very long. The ones farther away, you'll see 30 to 40. But then, we're going down here. And then when the actual number, when the number goes with actual comes out, you'll just see they'll go wide. There'll be nothing in there, and then you'll just see a bunch of ones, very, very, very wide. So that's why you get that kind of action. Yeah.
If you're an electronic market maker, you got to do it too. You got to go wider. Obviously, I do most of my trading manual. I do have some algorithms that I could use, but for the most part, I do a lot of my stuff manual. I'm back to click. I used to trade, I've told these stories before, but I used to do a lot of automation back in 2004, 2005, 2006, before high frequency trading was a thing. But what I found was I actually had two accounts. I had one that would trade and one was almost all automated. Like I was just running automation in there. And it would make money all the time, too. That's why I know a lot about it. I did it. I had thousands of orders a day. So, I was trading high frequency trading before it was high frequency trading. But what happened was in 2008, 2009, 2010, after the financial crisis, it got so efficient, it got, and so fast that what happened was my algorithmic systems weren't able to compete. So at that point in time, you're going to, spend millions of dollars to, in obviously software updates. And, now you're going to go into, co-location and into the speed race, or you've got to adjust your strategies. So where I was trading off of speed years ago, back in 2003, 2004, 2005, I now trade, a little bit more off of information interpretation, I like to call it. People say that, but flat out, stock is taken over for 20 bucks a share. I'm probably not going to be able to make money on that headline. But when the headline is gray and the algos aren't participating because they don't know how to interpret it, that's where I come in. I trade news interpretation. And when I believe that the market is interpreting it wrong, I will put on a short or a long, depending on which direction I think it is. Just like last night. So for example, I'll give you an example here. We're going on a tangent. MITT. So MITT comes out with update on their financing situation, an update on their, an update here. So if you go into the pro, you will see last night at 6:31, they provide an update. And they talk in this update. If you just go into the pro, you'll see it there, Spencer. I'm just trying to grab it actually. Or was it the 522 one? With the 522 one, there was 2 updates last night.
Here, let me find it one second.
Yeah.
I was doing something.
In any regard here, it comes in there. I'll just read to you. So the company has received an aggregate of approximately $145 million of margin calls due to market declines and haircut changes, which it has not honored or otherwise met through the satisfaction of financing liabilities. So this company MITT is basically not meeting their margin calls. That doesn't sound good. That doesn't sound good. But for whatever reason, the market thinks this is good news. They bought this thing up to $4 last night. $4. Because, and then there's people on Twitter arguing with me that, well, it says though in there that they're talking, and they're negotiating with their financing counterparties. So they're trying to negotiate their way out of it. But let's call a spade a spade. I'm eating margin calls. That doesn't sound like a good news interpretation. This thing traded up over $4 last night on this. Anyways, I did put a short on it, and today it's 307. I covered too soon. FIFO with me, I always get out too soon. But I was able to cover it last night for a profit, and I got out. But I mean, you look at this thing now at 307, you think, okay, that makes more sense. So whoever is buying that, thinking, oh, it's good news that they're not meeting margin calls, and it's good news that they're negotiating with their creditors, it doesn't sound like good news. So that's where somebody like me is going to make an opposite opinion and say, I don't believe the stock should be trading higher here. And there was definitely people making the bet that, okay, yeah, maybe they're going to get, people are saying maybe they're going to get bailed out. Maybe they're going to, who's coming to bail out AG Mortgage Investment Trust on their $147 million worth of liabilities? So it's all about, in this environment with as many headlines as we continue to get, there is huge money in news interpretation, being able to interpret and be on the right side of it. You're not always going to be right. Sometimes I'm wrong, and then you've got to work out of the trade as best you can. You've interpreted it wrong for whatever reason, the numbers. But just like Costco numbers last night, initial thoughts might be, oh, they're good numbers, let's buy this. But let's think about where the market is on Costco. The market is like, we expect really good numbers because, we've been seeing lineups outside the door, and we've been seeing everybody stock up their pantry. So it's not absurd to think that, it's down $10. Media will come out and try to find some fundamental reason to justify the sale and saying, oh, well, they didn't do this right or this right. They'll read through it to try to find a fundamental reason to justify the price. But most of the time, it's all about expectations. And if the expectations are, here, and the company comes in here, even if the number looks good compared to here, it didn't meet those higher expectations, stock is likely to fall. So lots of money to be made in headlines. I know there's people out there who believe you cannot make money trading headlines. I've been profitable every year for the last 10 years, basically trading headlines and doing a little bit of arbitrage on the side. So I can tell you that whoever is saying you can't make money on headlines absolutely doesn't know what they're talking about. Now, is everybody going to be able to make money on headlines? No, there's a long learning curve. I've been doing it for 15 years, reading headlines. I can speed read. Like, I am a very good reader because I'm trying to pound through these things as quickly as I can. But, there isn't a lot of money to be made on stock gets taken over at $50. Stock that's black, headlines is flat out black, and there's no doubter it's going up. Hard to make money on that because the algos are all over that. But algos don't like gray. And that's where a human being can still succeed by trading headlines. There's some, for your pro subscribers as well. There's still money to be made with Benzinga Pro.
Great. All right. We went down and made a low at 27.01. Just a small daily level I had there at 0275. So found support there the first time. You would have just had to have your order out there in order to get done. Mid-range still coming in at 38.25, and that's close enough to the high close of the rebound yesterday at 27.35. So that's how we're setting up here, technically ahead of the number. Did we already go over the expectations for the number?
The consensus estimate is 5.2 million. And that would be roughly half of the 2-week total. We've seen about a little under 10 million people in the last 2 weeks file for unemployment. So this week's consensus is sort of right in that midpoint area. First time in 3 weeks that Goldman Sachs is not at the high end of the estimate here. JP Morgan is calling for 7 million. That is the high end of the range. But 5.2 is the number to watch here. 5.2 million initial jobless claims.
Okay. All right. Well, we got about 4 minutes here before that number comes out. I see the house and mouse here.
Yeah, let's talk
in the green.
5.2 or 5.5, somewhere in that low 5 to mid $5 million handle range.
Let's
Okay,
take 4 minutes on Disney because
Disney Plus.
Yep.
Disney Plus. Disney announced yesterday that Disney Plus now has more than 50 million paid subscribers. That came out yesterday at like 5:30-ish.
Nice numbers. They ripped the stock on it. Props to Kramer, who actually had mentioned this before. He's saying, I actually heard him say it, that the Disney Plus is probably blowing it away. And, logic would say, yeah, everybody's sitting at home. They're probably going to want more TV. Let's try this Disney Plus out. So, that's the good news. The bad news is that we're significantly off the highs. And how high did we get, Joel? Because this has got silly.
Yeah, this they had an initial ramp up, and then they gave it another poke and got it to 109.88.
Call it 110.
Yeah, 110. Didn't we have something up there at 110? A while back. No, nothing at one. We haven't been.
It's a big hole psychological.
Yeah,
number.
You're right. Probably some offers there.
Yeah, I'd imagine. I don't have actually I do have my book. I could go look here quickly. JV Speck will beat me to it. He's really fast though. But I'm going in looking at the Disney book. What I mean by the book is I'm going to the NYSE open book, which you can subscribe to for $60 a month. Then you can see actually everything that the designated market maker would see in the book. I'm trying to go up to 110 to see if there's anything kicking around up there. You know what? I don't know how some people have the deeper book. Mine stops at like 50 levels. So I don't know why that is. I don't know if that's a thing, but anyways, I can see there's some size 108, but there's nothing really in there. So I can't see up to 110. JV Spec, I think, has got a deeper one. He subscribes to the better book, I guess. So
400,000 shares have traded. An area of interest, you want to see it hold the high from yesterday, or 2 days ago. That's 105.89. So you're just kind of hanging out there at the 2-day high. If you continue up, a next potential target could be 107.73. Dennis, you mentioned some size there, potentially at 108. And then, of course, you want to, take out that pre-market high, 109.90, call 110. But in the green by 4.5%, and with the market going down 1%. Some good news there for Disney.
It's good news, but let's put this in perspective. If you're coming buying Disney at 110 last night on this, the parks are closed. Their movie operations are basically all closed. I don't see anybody flying back to the parks when we get the hell out of this thing. I think it's going to be 18 to 24 months before you start seeing Disney numbers go back to normal at the parks. So there could be some suppressed earnings here for a while. And then you think, okay, well, Disney Plus, oh yeah, rah. Well, that's a drop in the bucket on their overall revenues. I mean, they obviously the big, I don't know what it is, but I'm sure it's just a drop in a bucket. Yes, it could be their growth. And yes, it's great that they had good numbers, but am I buying Disney up 8%?
829, Dennis. 829. We're not fooling around this time. 829.
Cancel all my orders again.
This time we are serious. So when we said the number is imminent, so we're about 35 seconds away here from a number. So
sure, we had that little bounce, and we have traded this up to 27.15 here. Really the high since we had that quick dip at I don't know, just a few minutes ago, we dipped down and made the low of the session 01. The rebound has been right here at 15. So kind of hanging in here. We mentioned the close from yesterday. You have traded through that closing price on quite a bit. That's 27.35. Also mid-range on the session comes in at that area at 38. So if we get a little bump, let's see if we can clear that area.
We're bumping.
We're trying.
You got the numbers, Spence?
Are they
slow on it?
Just froze up. There we go.
There it is.
6.6. All right, 6.6 million initial jobless claims filed last week again versus 5.2 million estimate. So that brings the 3-week total to about 16 million initial jobless claims filed. That 6.6 is right in line with last week. That's interesting.
What is normal? What's normal in this? What do we normally see? Just to update, and I don't even follow it that close. Like, what do we normally see? I know this is just absurd, but what is a normal jobless claims?
I think the 12-month average was in the 200 thousand
Yeah,
to
that's what I thought, too.
250,000 range.
200,000, and we're talking 6.6 million.
Well, keep in mind that like numbers were like unemployment has been at historic lows here. So the 12-month average is a 12-month average of an historically great period for the job market. But we're looking at, I think, around 250 to 300,000 was the 12-month average.
Right there, we talked about going unchanged.
We find ways to make news. We find the silver lining. This market loves silver linings.
Yeah,
and even despite the numbers being absolutely terrible, we rally 30 handles on that. That's what we're in this market. This market is now disconnected from fundamentals once again. Traded on logic a lot of times, but now, no matter what, it's like, okay, good news for Costco numbers. We're going to slam that because the expectations are too high. The expectations are so low for the economy, so low for numbers that it doesn't even matter what they report. They're going to rally it on it. So they come in below the low expectations, and we still rally on this. This market loves a silver lining.
You mean they came in below the worst? The worst expectation was 7. And we came in at 6.6 million.
It said 6.5 was the average. So we were below, which is already 6.4. It says estimate is 5.25. It says here.
Yes. Yeah, that's correct.
Prior was 6.64. So it sounds like we came in a million more than what was estimated.
I guess
that's good news.
Yeah.
I was confused. It is what it is. This market now trading off of logic. It has been trading very much off, just thought, but now it's trading that we got to buy every dip no matter what. People are actually scared that they have missed the bottom, and they believe that we are going back to new all-time highs, that we're going to open this economy next month and everything's going to go back to normal. I do not believe that, but who the hell knows?
You just popped up to 46. So that came up a little bit shy of the pair of highs from Wednesday and Thursday. It really didn't come within earshot of the pre-market high at 27.69 and a quarter. We went green, we stayed green. Now we're kind of struggling to stay green here. So my focus still is going to be on that closing price of 27.35, and as I mentioned, mid-range right there at 27.38. I expect the Bulls and the Bears to battle it out at that level.
We should also point out that continuing claims were lower on a week-over-week basis. Continuing claims 7.4 million versus 8.2 million last week. So continuing claims going down. Initial jobless claims staying steady, at least on a week-over-week basis. And that's where we're at. With the initial jobless claims number for this week, 16 million people have filed for unemployment in the past 3 weeks. 8:33 here.
Good news.
Oh, that's great news. That's fantastic news.
40 handles worth of fantastic news here, Joel.
Yeah. Yep.
I mean, I look at this and it's hard to just justify, from a thought process of what the hell's going on now. So I'm at a point, I almost feel like going to 100% cash. I almost feel like that, but I know I never want to do that. And that would be a very, very wrong move, for obvious reasons, because this market, if it continues to just shrug everything off and climb the wall of worry like it did, it's possible it could go to all-time highs. So, by the end of the year, it's possible. Nothing's out of the realm of possibility with this market. So I'm going to continue to hold the stocks that I have, but I can't come in here and buy stocks here now. I mean, after a 20% rally in a week, like I said, I bought 8 or 9 stocks. I got myself probably back down to like a 70% cash scenario, but I'm still loaded with cash in the long-term portfolio. Loaded with cash. And I'm going to trade. Like you got to, so I'm putting the investing hat on, because some people think when I'm talking about it means I'm not going to buy any stocks. I trade everything. I buy and sell and short stocks every single day, inefficiencies. And my day trading account, it's active. I usually try to get flat, after 10 o'clock in the morning, but I do overnight trading because I know the big moves are overnight. But the investing cap on, people keep asking, what are you buying? What stocks are you coming in? I get this question 3 to 4, maybe 5 times a day in either emails or Twitters. What do you like? What are you buying? I can't bring myself to come in here and buy anything at this point in time. The time to buy, I believe, they gave you a shot yesterday too. And I thought about buying some more stocks yesterday on the pullback, but I just think about where we are in this, and I don't think we're out of the woods. I just don't see him. Bill Gates was on CNBC this morning, and he was saying some great stuff that I completely agree with. Kind of, what we've been saying on this show is, even if you reopen the economy next week, let's just say that the U.S. government says, screw it, the cure is worse than the disease, like Trump's been saying, and we're just going to reopen everything up. What Gates said was, people are not just, consumer habits for the short term here have changed. People are not just going to go back to the normal course of business if they think there is danger out there. And that's what I've been saying, is that it's just because you reopen the movie theater and the restaurants doesn't mean everybody's going to go flock to them tomorrow. We're not going to flock until we know that we're not going to get sick. So it's kind of pointless to just reopen everything up when there's still the potential to get sick out there. So until we get a vaccine, or at least a therapy that does some pretty good work, there's still going to be a significant portion of the population that's going to be spooked. Some people might just go out. Maybe, let's just say hypothetically, half the people go out and go back to hotels and do their business, go on vacations, go on flights. It's still not enough for all these companies to get back and, start making money again. Certain companies, haven't been hit, but there's a lot of companies, like the airlines are saying, they're flying at 20% capacity and the break even 65. Well, I think if you just reopen and say open everything up, I don't think they get back to 65. So I think they're still burning cash, burning less cash, but still burning cash. So I don't think that you're out of the woods here until we have some type of therapy that absolutely works. Can we do that overnight? Absolutely. Science can change things on any given night overnight. We've got it. We've got the thing that works. Everybody's going to get better. If that changes everything overnight, we could rally 20% on that overnight. But I don't know if that is going to happen anytime soon. And if it doesn't happen in the next few months, there could be more companies that are in significant trouble. I mean, you look at like a REIT like MITT that can't meet a margin call. I mean, okay, we can fight that for a while, and maybe we can delay it, and maybe eventually, the time will take us out of this. But there could be a lot of companies that actually do not survive if we are in the shutdown period for more than 2 or 3 or 6 months.
All right,
and that's my concern.
I want to get our guest thoughts on this. Craig Johnson is Managing Director and Technical Market Strategist at Piper Sandler. Craig, good morning.
Good morning, and thanks for having me on the show. Can you hear me?
Yes, we can. Craig, I want to get your thoughts on that number and the market's reaction to it.
Well, the market was really fearing a number closer to 10 million. And when you go back and you look at the fact that the average over some of the most hard-hit states was around 9%, and the number you put out here today at 6.6 is certainly not as bad as what the market had ultimately feared. And I got to tell you, I look at everything that's happening out here, and yeah, there are a tremendous amount of problems out here. But I got to tell you, in the last 24 to 48 hours, the portfolio managers, the guys that are running billions of dollars, they've gone from a psychology shift of I'm worried about losing here on the way down to it's now gone from what I call FOCO to FOMO, right? Mm-hmm. Fear of the corona outbreak to now FOMO, fear of missing out. And these investors need to be invested. And with this jobless number coming out today, not at a number as high as, say, 10 million, investors are going to be looking to use any sort of weakness as an opportunity to be buying this dip. Dennis, I agree with you. There's definitely a ton of problems out there that need to get worked out. Fundamental analysts have no idea what the earnings power looks like for these companies. But I really think what's going to happen from having conversations with people, they're going to start looking across the valley. They're going to look at what their numbers were for 2019, look out to 2021, and they're going to average out some of these things to start figuring out where these things should be. At this point in time, the bottom definitively has been made on March 23rd. We're not going to get a retest. There is zero evidence that we're going to get a retest. In fact, when I go through and I look at every single stock in the S&P 500, I look at the NASDAQ, I look at the Russell, zero stocks in the S&P 500 are breaking below the March 23rd lows. Less than 100 stocks in the Russell 2000. So anybody that's out there looking for a retest or a further breakdown from here, it's not going to happen, because the evidence in the market, based upon the charts, based on the stocks, does not suggest that that is the case. You also come over and you look at the fixed income market. The Fed has done a great job of getting their arms around this fixed income market at this point in time, and things are stabilizing. You can start to see that the higher, the high yield spreads and those things are starting to come down. Yes, they're still elevated, but they're not getting worse. You look at where 10-year bond yields are, they're coming down, they're not rising, which I think is a good thing at this point in time. No question, there's a lot of humanitarian problems and challenges out there, But right now, the market is moving in the right direction. And I think you're going to see a market that's going to look more like a, how do I say this? It's going to look more like a market that's come down and then it's going to go back up and then ultimately just kind of go sideways for a while. And I think what is going to happen is that when you go up to this 2790 level that I think will probably get tested in the next couple of days here, you move through 2790, 2800, anybody who has not gotten back onto this trade from an active management perspective or even a computer perspective has already missed 50% of the move off the bottom. That's really hard to keep your seat and keep your chair if you've missed 50% of the move off the bottom from an active management perspective. They will have to cave, they will have to participate, and then I think this market takes a pretty quick ride up to the 200-day moving average, and then we consolidate. So that's going to be right around 3,000 on the S&P 500, guys.
What would change your mind on this scenario?
Well, if there was going to be a 10 million jobless claim number, that would have changed my mind. Something else that would change my mind would be as if if the economy is closed and shut down into, say, September or August or September. But right now, it looks like the bad news has been priced in. This has been a bear market, as my good friend Jim Paulson has said. This was like a hypersonic bear market that played out very, very quickly. And a lot of that got priced in extremely quickly. And right now, I look at all my breadth measures, all my gauges, all my sentiment things, and they got washed out to zero. And guys, I've only seen that happen now 5 times since the 1960s. This is the 5th. And when I get readings this low and I look out going forward, I find that the market on average is higher 13% 26 weeks later. So again, sentiment with the put call ratio, I look at the AAII numbers, I will look at those short-term gauges and sentiment, and they really look like they were fairly well washed out. And now again, from the conversations I'm having with managers, they're starting to fear that they're missing out. And when I look at, again, all the stocks out here like the restaurants and DRI, they're all making higher lows. And if today's price action continues from yesterday, they're going to be making higher highs. And so anybody that's looking at a basic definition of technical analysis would say higher highs and higher lows is the start of a new uptrend.
We've also gotten some more some news out of the Fed here that they're going to provide up to $2.3 trillion in loans and have launched a $500 billion lending facility to support state and city finances. They're going to provide $600 billion in loans through their Main Street program. So more Fed actions here this morning is definitely not hurting things.
You know, listen, the number one rule of investing has always been, and we all know it, don't fight the Fed. And in fact, don't fight the Fed, don't fight the central banks. The central banks really have moved in a very hypersonic speed. Our fiscal policy, the government, while you may not particularly like aspects of it, they have moved very quickly to put some sort of bridge process in place to get money to people, to get loans out there. Some argue it may not be fast enough, but I don't think I can tell you a time in history where they've moved as fast as they have. And again, combination between the Fed and fiscal policy, you got about $6 trillion that's coming into this economy to help support the economy in this clear time of need. Again, the humanitarian problems are horrible, but as I look at stocks, I look at markets, the lows were made on the 23rd of March.
I absolutely agree with you that the lows are in. Absolutely agree. I actually been saying this on the show the last few days. At the point now where I don't think we're going to retest either. But what I struggle with is to come in here and buy the stocks now when we're 20% or whatever we are now, 22% off the lows we made 3 weeks ago. I feel like if you're coming in here and buying now, like the time to buy was when there was blood in the streets. The blood isn't there anymore. And now you look, even from a 50% retracement, which is the number that you just cited, you think about, we get back up to the 50% retracement. I mean, stocks trade in waves. You could argue that we might have a little bit of resistance when we get near that 50% retracement at 279 spot. So I just struggle to say I absolutely need to be in these stocks. And, as a manager, and obviously I'm not a big money manager, I just manage my own money and I'm a prop trader. So, a prop trader trades, and that's besides the point. But, I do manage my own personal investment portfolio, and I've been with cash for a long time. I'll tell you how I'm going to rebuild my portfolio is, and I think you're going to see this in this earnings season, you're going to see a lot of ugly individual numbers. And I think there's going to be buy the dip mentality in all of those stocks, because there's going to be money managers, like you're saying, scrambling to get back in, maybe just not on the market overall. But if you get like a 7, 8, 10% dip on an individual stock, on a report that's horrible, which there's going to be horrible reports, I think those are going to get bought very quickly, because what you're saying, and I agree with you, is that there's a lot of money managers that are looking to put capital back to work.
Yeah,
so what are your thoughts about buying the dips on the individual stocks and coming into this earnings season?
I think you are definitely going to get some dips, but if you put up on your screen, because I don't have that screen sharing turned on right now, but if you put up on your screen, charts like Lulu, right?
Yeah.
Like quality stock, this thing has already bounced very well off the lows, and yes, if you get a dip in that stock, you're definitely buying it. And if you look at that particular stock, it's going to be an opportunity for I think investors to again buy the dip on names like that. But if you also come back and you start looking at stocks like Royal Caribbean, RCL, there's zero question in my mind that people, whether they're in Europe, whether they're in the US, they're going to go on cruises again. It may not be in the next couple months, but here's a company that's got about $5.6 billion on the balance sheet. They've already got all the loans in place they need for the builds of their new ships. Like, I don't think even if they put out a train wreck of a number, I don't think investors care, because they already know that the number is a total train wreck and it's a kitchen sink number going forward from here. So as long as it doesn't look like there's some sort of balance sheet impediment or some sort of hurdle from that perspective, I think that stock is going to go up on their earnings announcement as you start to see a rebuilding and a resetting of levels and expectations for investors from there. So I got to kind of pick and choose between these things. And again, where I think you're not going to get as much of a breakdown is in some of these rubble stocks that have already been very well beat up. Stocks like DRI, Darden Restaurants, Royal Caribbean. Some of these names have already gotten very well washed out. I don't think you're going to get a dip in some of those names. Lulu, you could. Costco, definitely, you're seeing that today because the number wasn't as big as people had expected during the hoarding of toilet paper for whatever reason.
Craig, you think new companies, new sectors of the economy are going to emerge from this that people should keep an eye on? And, restaurants, we're talking about the ones that have been hit hard, during this sell-off. Do you see any new sectors, after 9/11, cybersecurity firms and defense were the focus? What do you see from this crisis?
Well, tongue in cheek, I would just tell you, I don't think the new growth industry is going to be toilet paper, right? And the hoarding of toilet paper has been enormous. That's been going on. You still go to the local Target right here in downtown Minneapolis, and you still can't find any toilet paper on the shelves, which is crazy to me. But more seriously, from an investment perspective, I'm not sure the leadership of this market has changed. I still think you're going to see growth stocks outperform. And when I look at ratio charts of that, that is still indeed the case. When I look at it from an earnings perspective, I'm still seeing better earnings growth potential from the growth type stocks. So the way I've been thinking about it from a sector perspective is I want to be overweight tech, I want to be overweight consumer cyclical, and I want to be overweight healthcare. Now, let me define that and break it down a little bit further. So healthcare is kind of the ballast for the portfolio for me. I want to be overweight that, good quality names, good relative strength, stick with those. The middle part of this third is going to be my growth-oriented names. This is where I'm going to own semiconductor stocks. This is where I'm going to own some of the SaaS stocks, where I've got good growth, good opportunities. And quality names, Apple will fit into that category. Microsoft will fit into that category. And then the other third of the portfolio, I'm going to own some of these names that have been sort of dislocated here over the last, say, 30 to 60 days. That's going to include, for me, airlines. It's going to include the cruise lines. It's going to include things like Callaway Golf, restaurants, etc. That's where I think some of the alpha is going to get made. And we need to own some of these names because when you look back to history, coming off the lows in December of 2018, investors had a hard time keeping up because they didn't buy some of those distressed companies that were being priced as if they were going out of business. And then you find out that they're not going to be going out of business. They doubled and tripled off the lows. You did the same thing in 08 and 09. So the playbook I'm taking off the shelf is more of that a third off these lows.
I just I think that trade, like, so I'm going to take the other side here. I just think that trade was 3 weeks ago. I mean, ELY, you just gave that was $4.75. It's going to be $12 here this morning. I mean, you're talking about a stock that's already up to 150 or 170% from the lows and almost back to half of its losses back. Maybe the airlines haven't run yet. So, you know, there might be a point there on the airlines that, you know, these haven't moved at all, but there's also the fear of some serious dilution if they do need and eventually need a bailout. Are you worried about dilution possibilities on the airlines, or you don't think there's going to be any dilution at all on any potential bailout?
Well, to that point, all the way around, taking the last part of your question first.
Yep.
I mean, the airlines are definitely kind of the most risky in terms of that trade and that perspective at this point in time. Government's going to come in. They're not going to let Delta. They're not going to let these airlines go out of business. So if there needs to be some more policies put in place for them, that will definitely be a positive. And yeah, that's why the airlines haven't moved. You look at a Callaway, you look at some of these restaurants, yes, they've already moved off the lows in a very big way. But if you step back and you look at a Royal Caribbean, if you just get back to where you were before the sell-off began, and let's say you're looking out, say, a year, 2 years, 3 years, those are still triples from here in some of those cases. And even stocks like Cisco Foods, one of the largest food distributors in the country, got really dislocated because of the exposure to the restaurants, again, which I totally understand. But going forward from here, it's moved nicely off the lows, but you're still a long way from even retracing half to 2/3 of the decline that these things have seen. So while some of the easiest of the money has been taken off the table, I think there's still some very good opportunities in those names looking out on these over the next 12 to 24 months.
We're getting asked here about Boeing, BA. Any thoughts on Boeing?
Boeing is one of these stocks that has been very much beat up, has been taken to the woodshed in a big way. But when I come back and I look at the actual price action on Boeing, we've started to make a higher low in here. And I go back and I look at the weekly charts, and we've been sort of reset the levels we have not seen since, 13 and 14 type levels. Again, a lot of pain. It's going to take some time for Boeing to heal and to improve. But this is not a company that I see that is in danger of going away. This is one of these companies in terms of national interest that is going to be around, and there will be additional dollars and funding put up for this company if need be. I look at some video that I'd gotten from a good friend of mine about how many airplanes right now are parked at the Pittsburgh airport, and it's an enormous number of airlines from American Airlines that are parked there. I get it. There's not going to be a need for new airplanes in a huge way at this point in time because we need to rebuild demand. And again, I think that will ultimately happen because a lot of the consultants out there, street analysts, other people, they're still going to meet, they're going to fly, they're going to move around, and demand will rebuild. I think Delta said that 90% of their revenues will be down 90% here in Q2. Clearly, that's not going to be how we should be pricing these stocks.
Craig, I will give you this. You are very convincing right now.
Oh, for sure.
I've been one of those people that has been just waiting for more downward action here, and so I could obviously buy lower. But you are extremely convincing, so I'll have to. I don't know. Try to reassess a little bit here today, but you're making some very good points.
Respectfully, if we move through 2,800, that 50% level. I have heard from many different trading desks that the computers are going to kick in at that level. And there is an enormous amount of money that's being driven by computers. And you know that from having done some of that trading, as you were mentioning in the segment before. But when that computer money starts to kick in, I think it's going to be 0 to 60 to that 200-day moving average on the S&P 500. Again, the QQQs have already moved through that 200-day moving average. So again, this is where you want to kind of work your way into this, and you should have put a slug of your money back to work when you got that kind of capitulation low, which is very difficult to do. The emotions are running high. Human costs are out there. You're seeing all the headlines. Everything is negative. Again, that's the Warren Buffett principle. You got to be greedy when people are fearful, and that was when your first leg of this should come through. I think people will feel even better once you move through that 50% retracement level, and I think that's where another part of the money comes back to work. And then once you've done that, then you've got this kind of, dramatic move up, and then you ultimately go sideways. And then you heal sideways for a couple quarters.
All right, last one, Craig, before we let you go. Do you have a near-term target here today or for the next couple of days in the S&Ps?
So what I'm going to be watching is 2790, 2800. That's what I'm watching near term. Now, my longer term price objective, I haven't changed. It's still at 3600 on the S&P 500, and I have said to everybody, and I've written in my notes, yeah, that's probably a little bit of a, as John Chambers used to say, a stretch goal at this point in time. But I'm not going to overreact to the sell-off. It's been a sell-off that we've seen in kind of a very quick hypersonic sell-off in here. I'm going to come back in a more thoughtful way, review that target probably in July, once the virus has kind of been tampered down, sort of burned out to a degree, and then come back and really think about that objective. But right now, the market's going to go higher from here.
All right, we've been on the line with Craig Johnson, Managing Director, Technical Market Strategist at Piper Sandler, with a very convincing bullish argument here. Craig, thanks so much for the time, and be safe out there.
Thank you.
Thanks,
Have a great
Craig.
day.
Well spoken.
All right,
Thank
yeah,
you.
very, very, very convincing argument from Craig there. So, all right, 8:56 here. We got about, or 57 now, 3 minutes left in today's show. Was there anything else on either of your guys' radars today?
Again, buy imbalances. I see a lot of buy imbalances here this morning. We know we're going to see sources of strength in Disney because of the Disney Plus numbers. I'm seeing the financials catch a nice bid this morning. TLT is getting smacked a little bit here this morning, so that also makes me think that the financials are probably going to be relatively strong. Bank of America 155,000 to buy, Citigroup 124,000 to buy at the open. So they're showing some buy balances as well. Oil is going to be very strong ahead of this meeting that we're going to get, obviously, today. We're looking at the individual oil stocks as basically the source of strength here today. ExxonMobil is trading up $1.27. It's got 554,000 to buy already. Chevron 95,000 to buy. Completely agree with Craig that we have went from, and the acronym he used, I believe, was FOCO, fear of the corona, or was fear of the coronavirus outbreak. That's a good one. I like that FOCO. I like that. I like that, Craig. To FOMO. We have totally went to that. 100% it has went to that. The question is, does that continue? Craig believes it does. He believes when we get over 280 that we're going to spike to 300. I don't know if it can continue like that. It would be a nice move. Completely agree with him. The time to put the money to work was definitely back at the end of March. I wish I would have bought some stocks back then in my long-term portfolio, but I wasn't confident enough that we weren't going into a financial crisis. It was looking really ugly then. And I traded through the financial crisis and watched markets decline significantly. It looked really ugly. It looks a little bit better now, but still the overall picture is still somewhat concerning. So coming in and buying now, you are a little bit late to the party, in my opinion. Maybe not. Maybe we just go back to all-time highs by the end of the year. I saw a money manager on CNBC that thought we could hit 3,400 S&P 500 by the end of the year. I just, I think consumer habits are going to be different. I think there's going to be a lot of things that are different here. So I just don't envision that scenario where we're just going back to all-time highs. But, I will be a buyer on pullbacks as well. I've been a buyer on pullbacks. Like I said, I bought some Microsoft. I bought some Twitter. I bought some some different stocks as well. I've been buying higher quality tech names with cash, like the Microsoft, but I'm scared of the trash stocks still. They've moved significantly, but I'm scared of putting money to work in Delta. I think, it hasn't moved. It probably makes sense that maybe these ones are going to be the next ones to go because everybody's just kind of combing the ditches for what hasn't moved yet. The airlines haven't moved, so maybe that's where the money's going to flow to in the next couple of days. The earnings are low. Expectations are so ridiculously low for all these things that there's probably going to, easily be able to meet those low expectations on all of these things. I don't know what a bailout looks like on some of these airlines, which is somewhat why I'm concerned about putting them in my portfolio. But I also feel like I can get good quality names and keep my portfolio still stronger looking. And I don't need to buy the trash stocks to make money going forward. Just don't sleep well. And it's about how you sleep. I mean, if you're trying to get rich and you want to, make your money overnight, some of these trash stocks, some of them are up, and I'm calling them trash stocks because these are the stocks, they're not obviously trash companies, but these were the stocks that were hit the hardest by the COVID virus. And these are the stocks that are really burning the cash. Some of these REITs, some of these, are off, 80, 90%, some of the smaller REITs. Some of these might come back if they don't go bankrupt. I mean, they're going to come back if they don't go bankrupt, but I don't know if that's the case. Some of the smaller oil companies like a Halliburton, for instance, goes from $23 before they started down to $4. It's $8 now. It's $9. So it's on its way back. Is it going back to 15 to 20? Well, if oil goes back to 40, 50, $60 a barrel, maybe. I don't know if oil's going there or not. I don't have a crystal ball, but what I can tell you is the way I sleep safely is by having quality in my portfolio here, and that is tech. I absolutely love tech and the big tech with cash. I still own my Apple, I own Google, I own Microsoft. Amazon is probably a good, it's come back a long ways here now, so it's hard to get all excited at all-time highs. But another one I love is Shopify. It's up $10. It's pulled back significantly off the highs. I believe Shopify is a great company going forward. So I think you could buy quality here as opposed to jumping into the smaller companies that might or might not survive.
Real quick, Zoom. Everyone's asking about Zoom here, and it's just quiet, folks. I don't know what you're looking for. You had that spike to 125.88 yesterday. Your 2-day high is 125. It's up 91 cents, just consolidating here. The break of those lows at 108.53, 109.57, and I think he tests triple digits, $100, but it's stubborn. It's not doing that. It's not going down, but I really think to get it in motion, you got to clear 126, and in between there, you're just playing in the range of the last few days. So nothing jumping out at me technically on Zoom.
Dennis, do you want to know which ETFs are on my radar here that I've been looking to buy?
Yeah,
slash have already bought? There are a couple here. So my list, as far as not the trash names, right? This is like the a lot of tech here. So we talked about KWEB, KWEB. That's Chinese internet. I also am looking to buy IBB. You all know what that is. I'm looking to buy FIVG, the 5G ETF. I'm looking at Hero, the esports ETF. These are all like super niche ETFs here that are not very liquid, but I like what they get exposure to. And I'm looking at ARKW, ARKW. That's the Kathy Wood actively managed ETF. She's got some pretty broad-based exposure to a lot of future type technologies, big into Tesla, big into cloud. There's a few other segments there. Payments. So that's one that's got pretty broad future exposure. So those are the few on that are on my list, and the MJ that I've talked about as well.
I mean, you've covered a lot of really strong sectors, and the problem is with a few of these, like you look at the gaming stocks, and I was buying some of these gaming stocks back in March because I felt like this is an industry that isn't going to get hit on it. I mean, now you look at like an Activision Blizzard, which is probably in that gaming ETF that you just talked about, and it's okay. It's went from 52 to 62. I mean, we're back up near the highs where we were when this thing started. So it's like, okay, the easy money's probably been made there. Take-Two, which I own as well, has come back, and it's actually higher than it was when all this stuff started, because video games, people are still playing video games, maybe playing more because they're stuck at home. So some of these absolutely are buying quality. A lot of that, those names you just mentioned, and those ETFs are quality. And I like that, and I would be a buyer of some of those stocks on pullbacks as well. The question I still have is, do I need to chase? Because really, if you're buying here today, you're chasing. There's no doubt you're chasing. 5 days ago we were at 245 SPY. Now we're at 276. So you're talking about a 15% move in 4 trading days. You are chasing. The question is, do you need to chase in this market? Maybe you do. Maybe we're just going to go straight up. We're going to V bottom here, and we're going to be at all-time highs by the end of the year. And you'll be happy you chased if that is the case. I'm not chasing. That's my opinion. I'm not chasing stuff here because I don't think we're completely out of the woods, and I don't know how we reopen the economy. So maybe I'm wrong. Maybe it took me. Even when I was selling everything back in January, I was 3 weeks early on that trade. 3 weeks, and I got punished for it. The market went up 7-8%. My whole first round of puts expired worthless because I didn't go up far enough. So timing of this thing is absolutely very, very difficult. But do I believe that there's only going to be 60,000 deaths in the U.S. now that they're saying, and Fauci is saying that? I mean, you start looking at the math. We're losing 2,000 people a day. We better get this thing under control in a hurry. Absolutely, the social distancing measures have worked. That is going to help the numbers. The question is, when we just reopen, or do we get another spell of this thing? Even when we reopen, do we get another spell of this thing in September? Lots of things to worry about. That's why I'm not going all in. I'm not a money manager. My performance isn't based and compared to anyone else if I don't want it to be, my investment portfolio. I don't have investors. I don't have people looking over my shoulders and saying, you're not beating the market averages. So I want to sleep well at night. So it all depends on your own
you-
situation.
So wait, you're telling me your wife isn't hounding you like, Dad, honey, what the hell?
My wife wanted to sell everything back in
Okay.
March. She has told me every day to go to 100% cash. And that's just typical of, a fear of what we were in. It looked really, really bad back in March. It looked like I was at a point where I was actually moving money around to get under the insurance in my bank accounts and in my brokerage accounts. Like, I got quite a bit of money. So I was like moving money around and trying to open up other brokerage accounts to move money around just in case it got into financial crisis situation. So it looked really ugly there for a bit. I mean, you look at the banks and there was no doubt there was some issues. When Bank of America falls from 35 to 17 in 3 weeks, don't kid yourself. There was some issues there, potentially on the table. It looks like we're coming out of that. I'm not concerned about a financial crisis here at this point in time. But what I am concerned still about is chasing the market and saying, I absolutely need to be in. We're going back to all-time highs. I don't see the formula for us just ripping higher. And if you're buying here at 277 because you think there's upside to 300, okay, but there's also the potential for downside here too. Risk reward is probably balanced here a little bit more. Again, yesterday, the buying opportunity it's giving you a lot of opportunities. I mean, we've had a lot of pullbacks. Maybe we're just going to continue to rip higher and we're going to get any more pullbacks. But that's not what this market has done. Again and again, we've had a lot, even in this little rally that we've had, the last 20% rally, we've had 7-8% falls. Well, just look at them. There's 1, 2, there's been 2, 3 significant falls even since we've had those rallies where it's given you opportunities to buy stocks. I've been punished for chasing stocks in the past. I do believe I will be able to buy some stocks. I believe you're going to get some. You're going to pull back in Starbucks today. So maybe that's a stock you pick on. Maybe this pullback's already gone. It's already gone. But I mean, opportunities like that, if you're really fast, Starbucks was trading like 68, 69. So maybe that's when you strike, and that's what everybody's going to be doing. And that's why the trading in earnings season coming up is going to be fabulous, because you're going to get opportunities where I got my buy the dip hat on. I mean, just for day trades even. But with that all being said, market's ripping up. I'm still sitting with 70% cash. So I'm getting punished for my cash position, even though I took, I went to that, I'm still way up in that trade because I went to it way back in January, February. But at the same time, I absolutely have missed the bottom. I've missed the bottom. Craig's right. The bottom's in. I don't think we're going to retest unless this thing just blows into a full pandemic again, and something else happens. I don't believe we're getting a retest. But I'm still going to stick with higher quality names because I don't think we're out of the woods.
All right. Went a little long here, but that's
we sure
okay.
Did. That was good, Rand.
Yeah, final show of the week. We are, of course, off tomorrow. Joel and I will be back with you at 3:40 today to wrap up the trading week. You can catch the replay of this show on YouTube or the podcast on whatever podcast platform you prefer. Thanks to our guest, Craig Johnson, and thanks to everyone in our chats. Please remember, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Everyone, happy holidays, happy Passover, happy Easter to all those celebrating. Stay safe out there, and we'll be back with you, the three of us, on Monday morning.